Hello everyone, welcome to ACCA Taxation video lectures brought to you by AccountancyTube.com. We are almost nearing finishing our income tax. We are now going to look at the partnerships. Now partnerships you will have studied at ACCA Financial Accounting, which was F3. Now in taxation it is almost exactly like that partnership, so only additional thing is that you will have to deal with the basis period. Now what you have studied at partnerships at your degree level or the F3 financial accounting, that was that when two or more people start doing the business for the benefit of the profit, for the sake of the profit, then they will decide that how much salary each of the partner will take, how much whatever the duties will be for all of the partners, and how will they distribute the profit. So they will decide that how much contribution of capital they are going to make, how much salaries each of the partners will withdraw, and how much of the profit after the salaries will be divided between the partners, and that loss ratio will be exactly the same as well. Alright, so that is basically the partnership which you have studied at F3 level or your degree level. Now we will do exactly the same thing in here as well, but the problem arises when the new partner joins a partnership. So there were two people doing the business already, then the third person joined the partnership. So that was perfectly fine for accounting purposes, although it wasn't as much tricky as it is in the taxation purposes. So say for example, if the new partner joins the partnership which was already going on, so for individual person who the third person is joining the partnership, for that person the the taxation rules will be different. So every individual in the tax partnership, every individual in the business partnership will have their own basis period. They will be responsible for their own tax liabilities. Alright, so if they are responsible for their own tax liabilities and they have their own basis period, it means that if there are three partners, all of them will have their own different basis period. If two persons who are already doing the business, so their basis period might be subsequent basis period. Someone who is just joining the partnership will have opening rules in the from the start of the trade to the next 5th of April. So that will be rules for that person who is just joined the partnership. Someone who is leaving the partnership will apply the cessation rules, the last basis period, final basis period, which will be ending on the business cessation date. Right? So as I said, there are different partners who are doing the business. For tax purposes, they are separately liable, so they are liable for their own basis period, so they will be paying tax according to their own rules, according to the days which they have joined the partnership. Right? So I will just quickly share the video screen with you so that we can read from our lecture notes. I'm using F6 lecture notes, and we will do F6 exam kit question as well, just after reading from the notes. Right, this lecture is exactly the same for F6 and P6, so because the material is exactly the same. So anyway, if you look at your lecture notes, which you can see on your video screen as well, so partnership, it will be the tax will be calculated in two different steps. First step is that partnership tax adjusted profits are apportioned among the partners according to the profit sharing arrangements. Right, so profit sharing arrangements include how much salary each person will take and how much profit they will take. And in the steps 2, it says that once each partner gets his own share, then each partner is taxed independently as a sole trader. So there will be separate basis period and separate loss reliefs. So loss reliefs will be separate as well for all of them individuals. On the right side, so it says that if there are three partners, partner A, B, and C, partner A will have their own basis period, and likewise for partners B and C as well. They will have their own basis periods. Right? Now we are going to do a past exam paper. It was examined in December, I think December 2012 it was. Sorry, June 2012. Right, that is a question which you can see on your video screen. Now in the requirement it says there are actually two requirements, but we are just reading the first requirement for now. Calculate F's taxable income for the tax year 17-18. Right, so F is individual's name, which is Flick in this case. So calculate Flick's taxable income for the tax year 17-18. So our tax year is 17-18, and we have to calculate the Flick's taxable income. Right, so taxable income would be after deducting the personal allowance. On 6th of April 2017, which is start of our current tax year, I'm reading the question from the start. So on 6th of April 2017, Flick commenced employment with 3D Limited. On 1st of January 2018, she commenced in partnership with Art Reel, running a small cinema. So he's also doing the partnership as well. So he's doing the job and he has a partnership too with Art Reel. Preparing accounts to 30th of April. So for partnership, they are making the accounts to 30th of April, right? So 30th of April will be in the first month of the tax year. So our tax year starts on 6th of April. So the accounting period is ending in the first month of the tax year. Then it says the following information is available for the tax year 17-18. So this is the employment information. During the tax year 17-18, Flick was paid a gross annual salary of £28,000, £28,030, right? So that is gross salary. It will be helpful for our employment income purposes, so it will go into the non-savings income of our income tax pro forma. Then it says throughout the tax year 17-18, 3D provided Flick with a living accommodation. So accommodation is provided by the company. The company purchased the property in 2008 for £89,000. So company purchased for £89,000, but we have to take the market value. So what is the market value? It says it was valued at £145,000 on 6th of April 2017. So 145,000 is current value. So we know that it is more than £75,000. So when it is more than £75,000, we will take annual value, which is £4,600. It is given to us in the question. Annual value plus £145,000, which is market value, less threshold £75,000. So 145,000 less 75,000 multiplied by our the official rate of interest, which is 2.5%. Right, so 145,000 less 75,000 multiplied by 2.5% plus £4,600 as well. So that is our value of the property. After that, the partnership information is given. Partnership's tax adjusted trading profit for the 4 months period ending on 30th of April 2018. So 4 months ending profit is 29,700. This figure is before taking account of capital allowances. All right. So that is tax adjusted profit. However, we have not deducted capital allowances yet. So we have to deduct the capital allowances. So capital allowance information is given below. In the note 2, it says the only plant and machinery owned by the partnership is a motor car that costs 18,750. So it is 18,750 is the cost of the motor car. On 1st of February 2018, the motor car has a CO2 emission rate of 190 grams per kilometer. So it is more than 130 grams. When we know when car is more than 130 grams per kilometer, it will go into the special rate pool at the rate of 8%. However, 8% is per annum, right? So in this case, it is just 4 months. So we'll take 4/12. Right, then after that it says the motor car has CO2 emissions of 190 grams. We already know that anyway. It is used by Art, which is partner, and 40% of the mileage is for private use. So there is a private use as well. So we'll calculate the full capital allowance, but only 60% of that, which is the business use, that will be deducted from the partnership profits. All right. So it will go to the special rate pool. So 18,750 times 8% multiplied by 4/12 and multiplied by 60%. All right. So 18,750 times 8%. 8% multiplied by 4/12, which is for 4 months, and multiplied by 60%, which is the business use. So that will be deducted out of the partnership profit of 29,700. Then it says the profits are shared 40% to Flick and 60% to Art. So we are not worried about Art anyway. We are only worried about Flick. Now, if I say that we are only worried about Flick, why did we calculate the car use then? Who was using? Art was using. We only did that because we want to know the actual profit of the partnership. Only then we will be able to calculate the profit of the Flick. All right. So 40% to Flick and 60% to Art. So we will take 40% of that. 40% of what? What is left after deducting the capital allowance, right? So 40% of that will go to the Flick, This is after paying annual salary of £6,000 to Art. Sorry, I beg your pardon. So we have to deduct the salary as well first, right? So 29,700 less capital allowances, less £6,000 salary paid to Art. Whatever is left, that will go 40% to Flick and 60% to Art. So we'll take only the Flick's here. So that is Flick's share of profit, right? Right, then after that, just beneath that, it says property income. So property income information is also given to us. In the property income, it says that Flick owns a freehold house. Is let out furnished. The property was let throughout the tax year 17-18 at the monthly rent of £660. So that is monthly rent, which is £660. So only we have to take the full year, because it says it was let throughout the year. So 660 multiplied by 12. So that is our rent. Then it says during the tax year 17-18, Flick paid council tax of 1,320. So council tax will be deducted in respect of the property. Also spent 2,560 on building a new extended porch. Because it is a new extended porch, so it will not be deducted. It is capital expense. We only deduct the revenue expense, so it will not be deducted. Then it says that she spent £500 on the new washer dryer to replace an old washing machine. A like for like replacement of the old washing machine would have cost £350. Now, replacement of furniture relief says that you can deduct only the same amount of cost which would be needed to replace the old asset, not for the new asset. So cost of new asset cannot be deducted. Only cost of replacing the old asset is deductible. So only the £350 is deductible in this case. So whatever the balance is, that would be our property income of Flick, right? So after adding all of these, employment income, property income, and partnership income, that would be our thingy, our Flick's taxable income. So let me just cancel the shared screen so we can do this question on the board. Right, so I'm doing this on the board. So first of all, I will have to take the employment income. Right, so working one, employment income. And in employment income, there will be salary of 28,030, and there is accommodation as well. Accommodation. Now in accommodation, I would say that it is how much it is? £4,600 plus 145,000 less £75,000, which is the threshold, times 2.5%, which is official interest rate. So whatever this amount is, that will go here. That is my accommodation, right? And after that, yep, that's it. So whatever this amount is, if we add these two, I think that would be my employment income, which will come in this column. Right, so that's my employment income. I've just written as Y, but you just have to calculate this figure. Then I'm just saving my time. So just do it on the calculator, whatever it is. That will, the final figure will come in this one. Right, after that, partnership information is given. So partnership profit. Excuse me. Right, so it is working two. Partnership. So it is basically 29,700. 29,700 is profit. So that is our tax adjusted trading profit of 4 months. I would just write it down as profit. So basically that is our tax adjusted. Let me write it full. So tax adjusted trading profit. Alright, so tax adjusted trading profit 29,700 That is before deduction of capital allowance, so less capital allowance. And for capital allowance, I will have to do the working 3. Excuse me. So working 3 I will do here. That is our capital allowance. Right, for capital allowance purposes, I've only got the car, which is 18,750. So 18,750, it will go into the special rate pool, which is 8% per annum. Right, and that would be for 4/12. So this 300 will be deducted out of this one. That is my capital allowance. So 29,400, I think it would be 29,400, and only 40. Sorry, we have to deduct the salary as well. So salary, frick. So it's £6,000 for the whole year times 4/12. So it's going to be 6,000 times 4/12. £2,000 is a salary which will be deducted. Remaining amount is 27,400. Fixture is 40%. So 29,700. Sorry, 27,400 times 40%. 10,960. 10,960. Right. So 10,960 is basically Frick's share, and that is his profit of the partnership. Right, which is for 4 months ending on 30th of April 2017. Was it 17? Yeah, I think 30th of April 2017. Now, let me just see in the question if it's 30th of April 2018. Sorry, it is ending on 30th of April 2018. Now, this is the profit for the year for the 4 months ending on 30th of April 2018. Now we'll have to make his basis period. Now his basis period would be from the start of the trade, because he has just started the business. So they have made first 4 months to 30th of April 2018. So from the start of the trade to the next 5th April. So which are from the start of the trade to the next 5th April will be 3 months. So we only have to take 3 months worth of profit. So multiply by 3/4, because total profit is for 4 months. So we are doing the basis period. As I said, for every partner there will be separate basis period. So because they have just started the business, so he has started the partnership. So from the start of the partnership to the next 5th April, so because they have made 4 months accounts ending 30th of April, so for 5th of April it will be 3 months. Right? So 10,960 times 3/4, that would be 8,220. So 8,220, that's his partnership profit. We only are left with the property income. So property income, and in the property income, what is given? So in property income, he's 660 is rent. So working 3, if I write working 3, I will do it here. Rent 660 times 12, that is my rent. And then I have to deduct the council tax. I'll have to deduct the council tax, which was how much? 1,320 the council tax. Then I have to deduct the sorry, I can't deduct the building a new extended porch. I can't deduct that. However, I will have to write down, so new porch, so it would be 0, and I will have to explain by showing I can show the note N. That's how you do in the exam, and in the end you will say I can write down here, so N, we cannot deduct capital expenses cannot deduct capital expenses. So new POSH cost is not deducted. Replacement of furniture relief. Replacement of furniture. However, it is restricted to £350, right? And just write down restricted to replacement cost. Right, so restricted to replacement cost. So whatever this figure is, rent less council tax and replacement of furniture relief, which is £350, whatever this figure is, that will come here. That would be total income of Mr. Frick. Right, is there anything else? No, nothing else. So that would be his income. I would just write it down as ZZ, and we'll have to deduct the personal allowance out of that. Personal allowance will be deducted 11,500. That is his taxable income. So taxable income was required, so that is his taxable income. If you want to note down this example, you can do so. For F6 students, please make sure you do redo this example, redo this past paper. It was examined in June 2012. So please make sure you redo this question after finishing the lecture. Right? For P6 students, we will do another question in the P6 video lecture in our next video. All right? So I will see you in the next video, and we will continue with our taxation lectures, which are ACCA UK taxation. Goodbye.